Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial. Thanks for joining me today. I'm at elevationfinancial.com if you want to find me. Real easy to find. And again, glad you're here. Thanks so much. We're going to talk about ESG investing today, and I'm going to give you kind of an executive summary overview of ESG investing. And by the way, a couple caveats here before I get started. Usually when I do these episodes, I have some notes in front of me and things are kind of outlined and structured a bit more. Not doing that today. I'm just going to kind of talk at you. So my thoughts may be a little less structured, they may be a little more chaotic, a little more all over the place. So forgive me if I'm not as polished or structured as normal, but I'm going to kind of just talk at you and just kind of have a discussion about ESG today. And so we will see how it goes. So first off, let's define what ESG investing is before we talk about it. So I have a specialty in ESG investing. So my tagline, if you see on my website, it says socially conscious financial planning and ESG investing. So that's kind of what I specialize in. I do a lot of work with other groups as well, but I really seem to attract people that are interested in ESG investing and aligning their money in socially conscious ways, and that's something true to me as well. And so that's kind of tends to be who I work with a lot. So let's talk about, first of all, what that means and dig into a little bit for those maybe who aren't as familiar with the concept of ESG investing. So ESG investing, ESG stands for environmental, social, and governance. And it is one of the ways in which we talk about aligning your investments with certain values. And the E, the S, and the G stand for specific overarching areas of values that many people are concerned about and interested in aligning their money toward in order to make a positive impact on the world. So let's break that down. So the E stands for environment. So environmental issues sometimes take the form of avoiding fossil fuels, promoting clean energy, and companies that develop clean energy or utilize clean energy. Avoiding or minimizing deforestation, being good stewards of our environment, forests, natural habitats, animal life. Those sorts of things are frequently important to people that are interested in having a positive impact on the environment. Many people are concerned about the direction we're going in terms of climate change, and there are lots of initiatives and lots of ways people are focused on doing better for the earth, for the world we live in. Again, things like renewable energy, solar, wind, divesting from the old traditional ways of producing energy and adopting newer renewable ways of producing energy. So the E stands for environmental, and that is, again, the concern around making a positive impact on our environment, fighting climate change, focusing on clean and renewable energy. The S stands for social. So in the ESG, the S is social. So social covers a broad spectrum of things as well. These could be things like being anti-racist, promoting inclusion and diversity in the workplace, promoting rights for marginalized communities, such as the LGBTQ community. So the social aspect involves a broad spectrum in which we would focus on improving the world for marginalized communities, creating inclusive workplaces, empowered teams, creating positive work environments that take care of people, employee rights, all these sorts of things encompass the social aspect. Not just in workplaces as well, in our society at large, being able to make a difference in the rights of marginalized communities. The G stands for governance. Governance covers things like board diversity, board transparency, company ethics, political contribution transparency, a general swath of activities that kind of dictate or I guess signify, I should say, or signal how ethical a company might operate, how well they govern themselves from a transparency and CEO compensation standpoint, and just general ethics around their operations. So that is what ESG stands for. And ESG investing is kind of a segment of socially responsible investing. And I say segment because it's somewhat interchangeable. There are some subtle differences. I'm not going to get into it right now because that's a big rabbit hole that could take hours. But I'm going to kind of say that ESG investing is a common term used to signify this type of investing. Some people, again, call it socially responsible investing or socially conscious investing. For the purposes of this episode, we're going to call them interchangeable because practically they generally are for a lot of people. So we're going to keep it simple today. So what is ESG investing? How do you do it? Why do you do it? What's it all about? So often I will work with clients that are interested in these types of issues. They're interested in supporting clean energy. They are interested in making a positive impact in the environment. They're interested in making a difference when it comes to social issues and supporting marginalized communities. They're interested in holding companies and businesses accountable for ethical behavior. These are all things that many people are interested in. And I want to pause for a minute here and have a quick aside to say that, in my opinion, this should not be political. However, it unfortunately becomes very political very often. I think a lot of times there are forces at work in our world that like us to fight with each other. There are certain aspects of the media and certain social networks, and just generally there are forces at work trying to get us to fight with each other, and that happens. But in my opinion, the values that I align myself with and my firm with, and the values that I present to my clients as options to align their money toward, in my opinion, they should not be controversial. They are things like, hey, let's be responsible with the earth and our world and make a positive impact on the environment. Like, a lot of people agree with that, whatever their political affiliation is. Or, hey, let's treat people well and be inclusive and supportive of marginalized communities, and fight for the rights of people who are otherwise struggling with oppression and challenges. So I I don't think these are super controversial, but for some reason they kind of get painted a lot of times as this leftist philosophy or leftist kind of agenda. And I don't think any one political party has all the answers. And so I kind of reject the notion that ESG investing is just for liberals or for, people with a leftist agenda. I think it generally, most people would agree that these are pretty darn good things to focus on and to be supportive of. So, yeah, maybe it's a leftist liberal kind of thing. Maybe not. I don't necessarily think it has to be. So, with that, let's talk about what it means and how do you do it? How do you invest in this way? How do you do ESG investing? So there are different ways to approach ESG investing, and I'm going to give you some objective facts about it, and then I'm going to give you some of my opinions about it. So objectively, the ESG landscape is very new and evolving. I shouldn't say very new. It's not that new necessarily, but it's becoming more and more sought after and more popular, and more people are interested in this type of investing as of late. So we are seeing more and more companies promoting ESG funds and more ESG investments available. So there are different ways to do this. So one aspect of ESG is simply exclusionary. You're divesting from certain negative screens, for example, or using negative screens to divest of certain types of investments. One example of this would be if you want to exclude fossil fuels from your portfolio. If you want to exclude any company that's maybe involved in producing fossil fuels or is a heavy user of fossil fuels. So that being the case, you could invest in certain funds that actively divest of these types of companies. They exclude these companies from their investment funds, and that would be a negative screen or an exclusionary or a divest strategy. And that is very common to a lot of funds. And a lot of people kind of use that as their default approach. Another way is to do more of a positive screen. You're not necessarily doing a negative screen or divesting as much, but you are instead flipping it the other direction and saying, well, I want to invest in funds that include companies that are involved in clean energy or producers of clean energy or R&D into clean energy or are doing some sort of activity or something about their business is aligned with positive change in the world. So that's a more of a positive screen. You're including companies as opposed to excluding companies. And you could do both, but that's one way to approach it. There is another way. And again, this is all not comprehensive or inclusive. It would take, there's a whole course I took for my certification in CRSIC that, is hours and hours and, tons of time spent, talking about all the nuances and details and complexities of socially, responsible investing. So we're not going to get into all that, but we're going to kind of keep it broad. So another way to invest is using impact investing, and that is generally what I align with and what I do for my clients. So impact investing is, yes, there is negative screening. Yes, there is positive screening. In addition, the fund managers of these baskets of stocks that make up these funds, they are actively working toward creating and influencing change in the companies that they are holding. So the companies that make up these funds are subject to proxy voting and communication by the fund managers to put pressure on them, quite transparently, to be better citizens, to actively make changes for the better in their companies. So, for example, it might take the form of talking to the boards and CEOs of these companies and saying, "Hey, we are encouraging you to become carbon neutral by a certain date or carbon negative by a certain date. We encourage you to adopt stronger workplace inclusivity policies. We encourage you to um, tilt your board more toward gender diversity. We encourage you to do X, Y, Z to create some sort of positive change in the environment or in our society." So they're actively trying to affect change in the companies whose stocks they hold. So to me, this is my opinion coming out. This is the one of the most impactful ways to truly make a difference. Yes, divesting from fossil fuels in a fund, yeah, that's something. But to me, I love the fact that I can put my money into a fund that is actively communicating and has an element of activism toward creating positive change. So again, that's my opinion, and there are various ways people approach ESG, but that's what I tend to do for the most part. And by the way, I should have said this up front. None of this is investment advice. None of this is specific advice. Talk to me individually if you want something more customized. This is purely educational, so don't take any recommendations here as advice for you specifically. So, how do we do this? How do we find funds that are ESG, and how do we find the values we want to align with, and how do we do this? So I'm going to give you kind of a freer way to do it, a kind of something you can do on your own. And I've also got some tools individually that I use from an advisor standpoint as well. But one of the better sites out there, in my opinion, for doing your own information gathering is Investor Values from an organization called As You Sow. So Investor Values is a tool on their website. So if you Google the words Investor Values, you should find it. And again, this is not endorsement. I don't have any affiliation with this organization. I'm not endorsing them or anything. I'm just kind of making you aware that this tool exists. So if you go to Investor Values, you have some options. You'll be able to plug in tickers for any mutual funds that you own or ETFs that you own, and it'll give you scores and reports, and you'll be able to see how your funds score in various areas. There's things like fossil fuel exposure, deforestation, gender diversity, prison industrial complex exposure, and a lot of areas in which you can pull reports and scores on how well they're doing. So, for example, if a fund has lots of companies in the fossil fuel industries, you're going to score very well. If your fund is pretty much free of those industries and companies involved in those industries, you'll likely score higher. Some funds you may notice have what's called sustainability mandates, which means that they take a more active role in, again, influencing companies and affecting positive change in these organizations. So it's kind of a rabbit hole. You could get lost in this site forever. So be aware and be cautioned that you could kind of go pretty deep. They also have some nice screening tools that let you say, "Hey, show me the top mutual funds that are environmentally friendly. Show me the top mutual funds that score well on in these categories," and it'll give you a whole list of funds. You can kind of filter and sort and view different mutual funds and ETFs according to criteria that you want reporting on. It's a pretty good site. I think it's one of the best public facing research tools available. So again, don't take this as specific advice for any particular fund or tool or anything. It's just educational, but it's a great starting point for finding and scoring funds that you may or may not invest in. I use some tools behind the scenes. I use one called Your Stake that it gives more detailed reports, some comparisons, specific impact reports. And so every year when I'm working with my clients, if I have a client that has a preference toward ESG investing, we'll pull out these reports. I'll generate reports showing them, where their money made an impact, what companies were influenced using their money, what sorts of scores they get on different attributes in the E, S, and G spectrums. So that kind of reporting is a little more advisor specific, but that's what I do as well. So so generally, to an approaching ESG investing, the most common way to approach it is to first kind of figure out what your risk profile, risk tolerance, your asset allocation should be from a classic kind of sense. You're going to put it together based on your financial plan. Then along with that, we would look at, okay, great. Here is our asset allocation. Here is our general profile for investments. What ESG funds are available that fit that profile? And then we match up your ESG profile with that asset allocation. So there are lots of options available now that didn't always used to be available. There are tons of, I shouldn't say tons, it's hyperbole. There are lots of funds available now that cover the ESG spectrum. There are some that are, I'm getting into really strong opinion territory here. So again, this is just my opinion, purely educational. There are some that do a better job than others. There's something called greenwashing, where there are certain funds that kind of market themselves as ESG, but when you dig deeper, they don't really do a lot to make a difference necessarily. They just sort of use it more as marketing. I really favor the fund families that have a true commitment to ESG and are not just paying lip service to the methodology, but they are truly making a difference. They're truly being active in influencing companies. They're truly divesting as much as possible. So there's a much deeper commitment there for some funds over others. So let's talk about some of the myths. A few episodes ago, not more than a few, actually, like maybe 10 or 20 episodes ago, I talked about some of the myths around ESG, and I'm going to bring some of those here as we wrap up. One of these myths is, are ESG funds going to perform worse than their non-ESG or more traditional counterparts? The data is really showing more and more that you don't have to sacrifice returns or performance for ESG factors. There's a lot of data showing that ESG funds tend to perform on par with their counterparts in the non-ESG space. Some even outperform historically. So it's more and more becoming an accepted myth that you sacrifice performance. In my opinion, this is again my opinion. I don't think this is much of a concern. You don't generally sacrifice performance with ESG investments, and in fact, there are arguments to be made that ESG investing actually lowers risk. One example of this is oil spills. Let's say you invest in funds that have a heavy exposure to companies involved in oil production. Well, we all know that when you have an oil spill, that's bad PR for the company that had the spill. It could last for years and years. The cleanup could last for years. The cost to the company can last a long time. It can be very detrimental to the company's finances, their brand, their PR. All this is a risk, and these things are factors when you're looking at risk factors in different investments. And so, by promoting sustainability and avoiding some of these more traditional energy companies, for example, hypothetically, in some ways you could be avoiding some risk. And so there are a lot of arguments to be made that performance is there, risk is lowered. There's at least an on par level of performance and risk when it comes to ESG investing. So most would argue that it's not necessarily a detriment. So that's one of the biggest kind of myths I like to bring up when it comes to ESG investing. So so that's kind of a primer, an executive summary on ESG investing. It's very much not exhaustive. It's a tiny slice. It's a tiny nutshell, but it's really meant to be that. It's meant to be just a tiny slice and a summary. Now, I want to wrap up by saying, okay, let's answer the question, does this really make a difference? Some would say, well, all this sounds great. It sounds like it's, just a bunch of, crazy liberals investing in these funds thinking they're making a difference. And it's really not, right? Like some people would say that. Okay, there's arguments to be made either way, but there is a growing body of um, information suggesting that this is making a difference. The more people are demanding ESG investments and funds that align with these values, the more we are seeing demand really take off and becoming more popular. And there are large pension funds and foundations and very large management companies that are divesting of fossil fuels, even in the past couple of years, more and more, divesting of investments that again, that are involved in fossil fuels and companies that are producing negative impact on the environment, let's say. So we're seeing divestments happen more and more. We're seeing more and more demand for impact and companies aligning with social change and environmental change. So I would argue this is very much making a difference. It's not overnight, but I would argue that we're very much seeing that the landscape is shifting toward our society and people in general saying, "Look, we think climate change is real. We think social issues are concerning. We think that corporate behavior is concerning. These are things we care about." And no longer is it, separating work from personal and politics and everything. Like, we're seeing especially younger people saying, "You know what, I really care about using my voice and my money to invest in a way that aligns with what I think we need to do to take care of the earth and each other." And so I think it's very much making a difference. I think the momentum is building. I think we're going to see more and more demand for ESG investments, and we're going to see more mature product offerings as well. So I'm excited to be a part of this space. I'm really thrilled to be doing the work I'm doing in this space and really specializing in this area. So that's kind of my executive summary of ESG investing. Again, a very tiny slice nutshell summary here. But if you have an interest in learning more about this, feel free to reach out. I'll be happy to answer questions for you or point you to resources. You can email me at podcast@elevationfinancial.com. Of course, I'm easy to find there. And as always, if you want to chat, go to my website, which is elevationfinancial.com, and you're welcome to book a meeting there online. I have a complimentary money session available. Even if you're not a client, you can just grab some time and we'll chat. So with that, thanks as always for joining me today. Appreciate you being a listener, and have a great day. We'll see you next time.